Hey everybody, it's Pete. Welcome to a new episode of today's Best Stock Picks. It is Thursday morning, September 3rd, 2020, just 2 days away from a 3-day weekend. I can't wait. It's been exhausting trading. It's been amazing trading. Yesterday was a little bit lighter volume, but we definitely found some nice pockets of opportunity to day trade yesterday. A few swing trades finally taking off and drifting in our favor. A couple of one-hit wonders yesterday that we're going to discuss today. But I want to start out with something that I get quite a few emails about, and we're going to analyze it and go read the tape just a little bit and give you some clues on day trading Tesla. I know I haven't really talked about that in a while. It's been up in the stratosphere, and a lot of people couldn't afford to trade it. Obviously, after the stock split, Apple, Tesla in a little bit different zone now, so it's opened up to a little bit bigger audience. So we're going to talk about day trading Tesla. We're going to use 3 days as an example of best opportunities versus stay away. And that should separate how easy trading Tesla could be from when you're fighting the order flow, and today's order flow doesn't match the longer term order flow. So obviously Tesla, Apple, Tesla specifically today, one of the hottest, if not the hottest stock on Wall Street, especially from an attention perspective, never mind the bullish nature of it. But day trading it versus holding it as an investment is a little bit different perspective. So we're actually going to pull up a chart on that. And I'm going to talk about a stock that I can't believe I'm talking about, but Costco, Walmart, those stocks right now are on bullish runs like we haven't seen in a while, and especially Walmart. Walmart is about to go head-to-head with Amazon. It's going to be interesting that we're talking to Stock Trading Pro in our videos, but we might be looking at a good long-term play. If they can get their logistics and online and everything together, they have the resources and obviously the logistics to do it. So keep an eye on that one as a little bit longer-term play. So we've got a bunch of stocks to talk about today, some swing trades, some one-day wonders possibly today, talking about the financials. So let's get into it. By the way, if you find these videos helpful, I'd really appreciate if you click down and subscribe and join me every day. We have education, we have stock picks. It would mean the world to me, and I think you'll get some great value out of it. If you want to trade personally with me for 30 days, definitely look at the boot camp. It's kind of like a 30-day seminar. We get everything I have to really understand what you're doing. So let's head on over to the charts. Let's take a look at Tesla, and we're going to just break it down in a little bit higher time frame analysis. So I always start out with the monthly, and obviously the monthly has just been on a tear. But this month, which is not that long of a period of time, obviously only 3 days, is following up this parabolic move. Now, when you get explosions like that in price action, they typically lead to the tape changing. So when we talk about reading the tape is changing. You want to see a clean picture to really have conviction. But when the monthly tape changes and you get after this kind of a parabolic move, you have to really be a little bit more picky about, you can't just go, oh, Tesla goes up every day no matter what, I'm just going to keep buying it. Well, that's not the case in the last couple of days. That hasn't been the case. So you can see here, as we're developing week by week now, and again, this is split adjusted, but it's still the same price action. We had really good weeks here. The story changed a little bit here. We call this a melted candle, where the open and close was pretty close. So it's not as obvious, not as bullish, not as, hey, let's just keep buying, and we start closing on the highs. And look what we have now this week. It's already 3 days of trading and almost a pure melted candle. Some of you might know that as a doji. I call it a melted candle because the body just keeps shrinking and shrinking and shrinking, but it's also an indecision candlestick. So how does that affect your trades in Tesla? It means that the story, the tape, the picture is not perfect. So you start up here at perfect and you work your way away from perfect. That means your trade management and your conviction needs to change. And I think that this is just absolutely perfect picture for you to print out. Wow, that's a lot of P's there. This is perfect. This is changing. This is a dramatic change. I'm not saying it's rolling over. What I am saying is it's not perfect anymore. So that means you need to work the order. That means you need to be a lot more disciplined with waiting for today's price action to match the longer term picture that you're looking at. So when you learn to adjust how you're trading, it becomes easier to manage your allocation of share size and your profit potential in perfect conditions, less than perfect, really less than perfect. The only thing that would make this worse is if this happened where it went well offered and was closing on the lows. We'll see what happens. That might end up unfolding here. We don't know yet, but again, perfect, less than perfect, wow, a lot less than perfect. So when we drill down, we're going to actually go to the last 3 days of trading. So we know that the last months, really the last year, the stock has been on fire. So we're actually going to just look very briefly here at obvious situations in Tesla, where we're looking at the longer term picture and the shorter term picture being on the same side. And that's where your conviction comes from. That's where the easier trades come from. So this is the opening price of Tesla 3 days ago, which in this right now, that happens to be Monday. And you can see the intraday price action was matching the longer term price action because the print came in the day and everything was trading above that for the most of the day, if not just maybe 5 minutes, it wasn't. That was an easier day to trade. That was a day where everything was on the same page. Then you zoom out a little bit and you're over here, and now you're looking at Tuesday's price action, and it couldn't get out of the way. It couldn't get out of the first print of the day. So Tuesday was mostly selling. So if you were buying Tesla at all, it had to be with lower share size. It had to be with working the order where there's a lot less conviction than on Monday. And then you zoom over to yesterday, which was Wednesday, we see the same exact picture. So if you were blindly buying Tesla simply because it was long over the longer period of time, a buying opportunity, and not recognizing today's order flow is a different picture than the longer term order flow, three very stark pictures here leading to three very different trade convictions. So at the very least, note if today's order flow is matching the longer term order flow in some of these ideas, and that will give you an idea of how you should manage those trades, how you should work the orders, and what kind of stalking. Costco, believe it or not. Costco now, we are now breaking out, and we kind of drew this channel here. We were looking for this to be the target, and we actually just finally hit the target. So this is actually an area where I'm expecting Costco to see some selling up in this range. However, because we're at these new all-time levels, because we're actually seeing consistently now from one day to the next where it's closing above the open, closing above the open, closing above the open, this is now on my radar. This is now getting into my list. And this is how you need to start thinking about what stock should I be following? Why should this stock have my attention? Why should this stock get an allocation of my hard-earned money? Because now it's got Wall Street's attention, which means now you should be looking to piggyback on that order flow. Earnings, before we get started, earnings, Campbell Soups, CBP, before the market opens, AVGO, Broadcom after the close, and I think the one that a lot of us are watching as day traders and quite honestly active traders is DocuSign has just exploded 2 days prior to earnings. Yesterday morning, we suggested if you were long as a swing trade, we were looking for the higher open to be profit taking, and you should get out and accept that gift. And this is what happened on the open. So hopefully you listened yesterday, booked the profits in ahead of the indecision with earnings coming out today. Next on the list is SHLL. Shell TORTOISE acquisition. The stock has now exploded again. And one of the biggest complaints I hear from people is that they aren't able to find a good spot to get into these better trades. And well, look, you had plenty of time here. You had plenty of time here. The bottom line is you need to be doing your homework, follow these videos, create a game plan, and anticipate the entries instead of chasing price. And that's what separates somebody who gets paid from somebody who is, oh, every time I buy the stock, I'm buying it at the wrong time. It seems to always move against me. This is why you're chasing price. The stock is still valid, but now it's 2 days late into the move, which means your trade management has to be different. GSX, I'm going to pull this one up, and this is a little bit of an advanced tape reading lesson. Now, by its very nature, you can look at the weekly chart and be like, not great, right? We just talked about monthly and weekly indecision, and that's a lot of indecision, right, for the week. And if we go out to the month, you can see what it looks like, right? But here's where you take it a step further. Look at the volume. The volume changed dramatically yesterday. We had a gap down, bullish day, and closed near the highs. We're going to let this stock unfold today. It's down a little bit this morning, but we're going to need to let it unfold and see if this lower gap again finds buying like yesterday. It might be an early entry into a good idea. So let that unfold today and keep it on your radar. We have a lot of one-hit wonders today we're going to talk about in a second that kind of fit that same category. But I do want to make sure that we talk about Target because this stock has just been boring us to death after what was expected to be another 2 or 3 good days. And we'll show you CRM in a second. But this has to be in your watch list. It has to be in your radar. once this stock starts to gain momentum again and consolidates this big bullish gap. Look, I keep talking about it every day. So when it does start to have that bullish move, you have no reason not to have had it on your radar. CRM actually is exactly what we were looking for from Target. Didn't see it. I actually think this is overdone a little bit now, but the reason I keep bringing it up is I want it in your watch list so that when it pulls back, pauses, and settles in a little bit, we're going to be looking for that next powerful move to the upside as well. Some of the one-hit wonders that we had yesterday that could be day trades today, maybe looking to build a swing trade, but not perfect trades. We're looking at AMAT today. The semiconductor index stocks across the board had a good day yesterday. Again, no order flow, 1 day's worth of price action. You would work the order if you're looking to buy it today, kind of looking to fill that gap. So not a lot of potential to the upside, but I'm pointing it out so you can start to develop a game plan of, okay, really good order flow, closed well. I could trade that aggressively. Not so much order flow. Great day yesterday. Maybe I could take a look to start building position. Not A-plus trades, and I'm walking you through the difference between an A-plus trade and an okay trade. Also, the financials, which I've been beating, that they're just not great, but JP Morgan and Goldman Sachs also one-hit wonders yesterday. You can see that neither one of them are perfect. However, you have to sit up and say when a stock closes at the highs, has a bullish gap, well, this wasn't a gap, but a higher opening and follow through and stayed above the open the entire day, it should be something that you cycle back to, not necessarily something that you're going to trade actively and aggressively like you would some of the other trades, but it's on the radar because it had attention yesterday. So when Wall Street gives a stock attention, it should start to get your attention. That doesn't mean you start trading it immediately, but something changed yesterday. A couple of stocks that did clear levels yesterday. DuPont. If you look at and zoom out on a little bit higher time frame, we do have some room to go. We actually have a little bit of resistance here at 61, which is kind of where we were, but then we're looking at 72.50. So we had an inside candlestick breakout, have room to go, and 72.50. This will probably be a little bit of a slow mover on the inside week breakout. However, still a good idea. All right. Next, we have EXPE. Hopefully you got involved in this one last week with us. We were talking about it here when it finally broke up, and we're starting to get some follow through. Now, what's interesting here is if we zoom out, we know the profit potential is all the way up here. We actually did have a multi-day pause here, so it's not, I'm not valuing it from here to here without expectation for follow through. Right now, we did have a multi-day pause here, so you might have missed yesterday's entry. You might have to work the order a little bit more, but I still like this stock long. NTAP. Couple more to round out the day here. NTAP is actually finally getting up to a resistance level, and you can see the profit potential here. Not a trade yet, but again, it's got to be on your watch list. You have to set alerts. Have your alert here set for 49. Gets above 49. Now it's on your radar. Plenty of room to go. This is how you get better entries. I can't stress this enough. You need to set alerts. Advanced traders, experienced traders might even set a buy stop up there for 100 shares and say, put it in my position summary. I want to know when it gets there. Next, we have HCA. Now you can see pop through with potential up to 156. So this has $18 potential through this level. This one has room to go as well. And Groupon is one that we've been talking about for a while. Push or pause, a push or pause, a push or pause. And we are now finally at or near the first target that we had, which was 36. We're probably going to see a little bit of a pause here. It'll be super interesting to see if we can clear this level over here at 40, because you can see there's a lot of room to go. And look, the world is what it is right now. A lot of people doing a lot of online buying, and Groupon is a part of that. Groupon's a part of that. So plenty to look at today. Workhorse is one of the stocks that we looked at yesterday. Exploded through resistance, pulled back a little bit. The trade's still valid. I don't love it as much. If it pulled back too far for you, just scale out or get out and look for a new entry. I've just scaled back a little bit, but I still like the potential through there. Work actually has earnings as well. So let's see how that plays out too. So hope to see you in the boot camp. Definitely click down and subscribe. And if you have any questions, leave me a comment as well. Have a great day.